Okay, everybody, it's me, Gregory Mannarino. It is still Wednesday, August 3rd, 2022. This is my post-market report. Now, I know for a fact that although you're paying attention to the stock market, all well and good, lovely, stocks did well today, especially the tech sector. Well, why would the tech sector be doing so good? The government is funneling tens of billions of dollars into tech companies, and nobody's saying anything, so the government is going to continue doing this. Meanwhile, as you all well know, U.S. small businesses are being strangled to death. Well, welcome to the new world order, and no one gives a shit except you or me. Now, let us move forward here. Yes, all well and good, stock market higher, yeah, rah, 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 lovely, beautiful. Okay, but it's the debt market insanity that we've seen as of late. Let's put a perspective on that real quick. Just several weeks ago, the 10-year yield was over 3.5%. You and I watched that drop like 100 basis points down to nearly 2.52%. Okay, now today we're at like 2.7. Okay, lovely and fantastic. What's really happening here? I'm going to give you a clue. This is Bloomberg, one of the mainstream propaganda ministries. This is a headline, and I want you to pay attention to this. Chaos in the bond market is a dangerous side effect of the inflation fight. It's not really a side effect of an inflation fight because there is no inflation fight. I'm using their exact words here. Central banks are inflating and they continue to do so. However, the first part of this is correct. Chaos in the bond market is dangerous. What is it telling us? When you're seeing gyrations like we have witnessed as of late in the debt market, first of all, who's doing it? Duh! Okay, ECB, Federal Reserve, we know that. So, but what's the telltale sign? What's going on here? What do we know is the fuel behind all of this? It's debt. The relentless acquisition of debt, which cannot ever stop. You and I, the greatest thing, or the greatest danger that lies in our path here is a liquidity lockup. You know that. I've covered it a million times. A freezing up of the entire system. Now, why would that happen? Well, the system itself is insolvent. It's insolvent. It operates on a debt-based model. Without more debt being created out of thin air, without central banks doing their thing, colluding with perverted governments to create reasons to pull cash into the now, crisis to crisis, expanding of wars, buying debt. This whole system is just over. Okay, so the system is insolvent. That we can establish. Okay. Now, what is going on here is some kind of yield curve, debt market management. Obviously, debt market management, well, that's been going on since the last meltdown here. Central banks buying it all, period, the end. Now, these gyrations that we're seeing here, and it's getting mainstream media attention here, yes, it is dangerous. There's no doubt about it. And these cycles that we're seeing, to me, appears very obvious that this is the action of central banks trying to keep the debt market stabilized. Do you understand? And the only way they can do this is by creating cash out of thin air, adding digits to a screen in any amount they want, and getting into the market and buying the debt. Central banks, people, you know this better than anybody on the freaking planet. Despite what people might think, they're not magical. They don't have any powers from any supernatural entity at all. No, they don't. They have to get into the market and make it happen. They can't just say something. You understand? I don't think people understand that. I believe a huge misconception with how central banks operate is, well, let's see, they can parade out Yellowstone Powell, in his nice tie and suit. And he can say, oh yes, we're going to be doing this to the bond market and we're going to be doing that. Well, they can't just say it. They have to do it, which means they have to get into the market and make it happen. If they want to keep a bond yield at a certain rate, well, they have to get into the market and make it happen. You understand? So I believe sincerely that we are seeing now an effect or a side effect here of central banks desperately for now trying to push off as far as they possibly can, because they're not done, a liquidity crisis on a monumental freaking scale here. And I don't think that we've seen the lows here with regard to the 10-year yield. We just about touched 2.5 on the 10-year yield. I would not be surprised at all to see this bump that we've had here recently, start to get bought up. And, look, for bond market bulls out here, I guess this is a good thing. I think you got to be freaking high as a kite, but that's a whole other story here. So anyway, I hope I have put a perspective on what I think is happening here. In my mind, there is no doubt at all that we are marching towards a liquidity crisis, and it's not by accident. It's being fueled. The hyper bubble in debt is being fueled by design. Eventually, that bubble is going to burst. It's going to change the financial landscape of the entire world. Cash is going to move from one set of assets into another set of assets. It's the same scenario I've explained to you since literally forever now, since I started this over a decade ago. I can't imagine another way it's going to play out. The game today remains risk on. Stock market has gone crazy ever since we saw that big spike in the 10-year yield. ECB got in here starting to buy it all, Fed following suit here. Look, is it possible that we start to see that 10-year yield spike in an uncontrolled fashion like we did? Could we hit 3.5% again or higher with regard to the 10-year yield? Absolutely. I think it is going to happen. When? Your guess is as good as mine. But I don't think central banks are done here inflating, creating cash out of thin air, buying assets. That's the goal of every central bank, to use their product that they create magically and just buy assets. Imagine having that kind of power. I don't think they're done. So the most likely scenario, in my view, and I could be wrong here, is I believe we're going to see the 10-year yield and the whole entire freaking yield curve come down, and that's going to push more cash into the stock market. That's really the truth, despite the fact that the stock market had a decent gain today, 400 points or so on the Dow, NASDAQ being the biggest gainer, S&P 500 doing pretty well. Crude oil made a stunning reversal and dropped like 3%, even though OPEC decided to make the smallest increase in output ever in history. We'll see how that plays out. Look, you know how crude oil works. It's an integral part of the military-industrial complex, the New World Order system, this one world government. You know this better than anybody else. So let's go throw an eye over at the market. So as I said, rally on Wall Street, 10-year yield 2.7, 2.71, crude oil getting hit today here. Bitcoin still hovering around 23,500. It's in a good spot as far as I'm concerned. I want to see it maintain around this above 21,000 for a few more weeks, and then I will buy more. I'm going to buy some of this stuff. I will let you all know when I decide to do that, especially those of you that subscribe to my free newsletter. Link in the description of this video. Gold and silver fell under some pressure today. Okay, and the dollar, I would say relatively flat, a slight gain. All that's well and good. It's all freaking well and good here, okay? But we can't lose sight of what's happening. And in my view, these gyrations here in the debt market, they're getting the attention of mainstream outlets who are talking about this. It's dangerous. Yeah, it's dangerous. But they're not telling you what's really happening here. Okay, liquidity is drying up despite the fact that we have central banks on overdrive, print to go burr. Yeah, it's not enough. No matter what they do, it's never going to be enough because the system demands that more of it, more debt be created. By any mechanism they can come up with, it can't ever stop. Imagine just for a moment if a politician, a brain-dead president, non-brain dead president would explain this to the people, or a Fed chair or a Fed president were actually to explain this to people, I think people would be running for the hills. They would start screaming for a different system. Oh, and a different system is coming, make no mistake about it. When we eventually do get this liquidity lockup, it's going to happen. And the outcry is going to sweep the globe. Everyone's going to get caught by surprise. You and I know it's coming. When? Who the freak knows? But we have a big clue. When we see the 10-year yield start to spike here, what is central banks going to do? Well, they could let it just implode, which I believe they're going to at one particular time, or they can get back in here and start buying more. But what they won't tell you, again, central banks having unlimited firepower, it's massively inflationary. This has got to be the biggest secret that's not being told to people, I think, in the history of the world right now. And I would love to hear from you. As always, please comment. What do you think about what I've covered here? Does this make sense to you, or does it just not make sense at all? If I am saying something here that is just completely outrageous, and again, I got it wrong, tell me where I got it wrong, okay? I will read the comments. I'm not too old to learn, all right? Look, love you a lot. I mean this from the heart. I'll see all of you in the morning, and that's all.